Welcome. I am so excited. Welcome to Real People, Real Talk. It is such an honor to be here today. And we've got some amazing people that are going to be coming today. You're going to get a chance to meet our 2021 president of the board. And also, you're going to get a chance to hear from Jordan Levine. I know we're excited to hear from him. But before I start the interview, and just kind of walk you through it. I know if you saw our postings and you came to this training today, you're probably thinking, who is this crazy lady on here and what is this about? You know, we decided last year that we wanted to keep our education exciting, and because there's so many different things that are going on, we thought we would do something fun. And as a part of us doing education on a monthly basis, we're going to interview people just like you that are in the business, professionals. They know exactly what they're doing every day. And so that's why we're doing Real People, Real Talk. So a few things I want you to do is I want you to take out your phone right now, and I want you to go to our Facebook page, Citrus Valley Realtors. It's at Citrus Valley Realtors. And I want you to like that. Why do I want you to like that page? Because listen, every time anything is posted, you're going to be notified first. Isn't that awesome? I just love being notified first. We're going to notify you anytime we have anything going on at the board. The next thing I want you to do is, did you guys know that we actually have a Twitter? Come on. Our board is awesome. We have a Twitter handle, which is at Citrus Valley AOR. Go ahead and link up with us, and you'll never miss any announcement that we have. Let's see. The other thing I wanted to do. Oh, did I say share? If you're watching us on Facebook right now, take out that little phone that you have, and I want you to push the share button and share this with those that aren't on today. Some of your realtor friends, I'm sure they're going to be so grateful with the information that you're going to receive and you're willing to share. Without further ado, I'd like to get into introducing who our guest is today. Now listen, Real People, Real Talk is a little different because we are interviewing people just like yourself. And this is going to be a candid interview. I usually give questions out in advance, but depending on how the conversation goes, we might have some random questions that come up that we're going to ask our guests. But I would like to introduce to you Janine Shedlock. She grew up in Connecticut, and her father was a residential builder. And she's come from that industry. She worked in the hospitality industry for many years, and her first position was at the Sheraton Stanford Hotel. There she was transferred to the Hilton line in California. When she got her license in 2021, she started doing finances, and she was doing actually subprime lending with Fremont and Wells Fargo before she jumped in real estate in 2007. She started specializing in commercial real estate, short sales, and REOs. And boy, do we remember what happened in 2007. And she also started a company called Shedlock Properties, Inc. It's a full service property management company. And she went from having no business to representing over 150 properties in a year. Our president is awesome. And not only that, she is actually our 2021 direct president of Citrus Valley Association. And so I'm going to bring her on. I want to introduce you to Janine Shedlock.
Yeah. I couldn't. It said I couldn't unmute myself.
Oh, wow. We are so excited to have you here with us today, Janine. And it's an honor to actually serve with you on the board this year. We've got some great things that are getting ready to take place. And I want to know, let's talk a little bit more about your childhood and how you grew up.
Oh, that's an open-ended question.
Well, we've only got a certain amount of time. So, just share with us. I know when I was reading your bio, you grew up in Connecticut and you came from a family of builders. That must have been pretty interesting.
It was pretty interesting. I grew up in Stamford, Connecticut, and my dad built residential. My uncle built commercial. My grandfather was a landscaper, and actually owned his own tree farm, plants. So my mom grew up doing that. So all of the houses that my dad would build, my mom would actually do the landscape architecture. So
Wow.
she didn't go to school for any of that, but she grew up with it because her dad had taught her how to, grow and plant and just a lot of stuff with different trees. So I did come from that line, but I chose a different path, which I find ironic. I should have gone into real estate when I was back in Connecticut selling the properties that my dad was building. Instead, I went into the hospitality industry. Go figure.
Right. Well, one of my favorite shows is Hotel Impossible. So I'm not going to go there and ask you a ton of questions, but that's interesting. What were you thinking of? Because I know a lot of times when you grow up in a certain industry and you kind of see it, you've been there, done that. A lot of people, a lot of teenagers, they just kind of sway away from that. Was that you, or was it just I wanted to be in the hotel industry?
No, it was just a matter of things happening. I actually started doing trade shows at a really young age, and I got a taste of running the show. I got a taste of traveling everywhere. It was just exciting to me back then, and I don't want to date myself, but back then, so we had pagers. And I thought it was the coolest thing in the world to get paged and have to be needed somewhere or do something. And so I just wanted more of that. And so I went into the hotel industry.
Wow, how exciting. Oh my gosh. No, seriously, I think probably my next go round, if I do change careers, I'll probably do something like Anthony with Hotel Impossible. I I love that show. So now, are you married? Do you have kids?
I am divorced. I was married for 23 years. I have two beautiful young men, can't even call them kids anymore. My youngest is 18. My oldest just turned 21 Christmas Eve, and they're both in college. So I feel very blessed that they are both very smart. They're good people, and, love them to death.
Now, I'm curious, are they exploring careers in real estate, or are they just saying this is for mom?
Uh, Neither one of them at this point in time wants to be in real estate. My oldest is a computer genius. So he is studying computer science and he has aspirations of his own, some that I don't exactly wish will come to fruition, which is he wants to move to Japan.
Oh, wow.
Hoping that doesn't happen, but it's a little too far away for me. And my youngest is a baseball stud. So he actually plays for Cal State San Bernardino, or he should be playing for Cal State San Bernardino, but because of COVID,
Gotcha.
they're all on the bench right now.
Wow, that's exciting. One of the reasons why we wanted you to be on here, obviously, we just love you, Janine, but we know that you have so many plans for Citrus Valley Association of Realtors, and this is your year to really implement some of those things. And so I'm curious, and I'm sure others are thinking now, how long have you been a part of the board of directors?
I was thinking about that this morning. I've actually been on the board, I believe, since 2011. So I've been on the board as a director for quite some time. I've also been a director for the California Association of Realtors. I did take a couple of years off somewhere in between, but it has been almost 10 years now that I've been very involved with the board, and Citrus Valley is amazing. I mean, as you know, we do great things. We have great members. It's an exciting time.
Wow, that's exciting. So I know everybody's asking this question. So what's your number one goal this year? Being the president of CVAR, what is it that you want to be remembered for?
Well, I personally don't have a goal. Everything is about us. It's about our members. So I guess that is my goal. My goal, our number one goal, is our members. Citrus Valley is about our members. And this year, it's going to be very important for us to stay connected with our members. We want to make sure that they stay motivated, they stay educated. It's been very tough for the last year for a lot of people, and COVID has put so many restrictions on realtors that it's important that we all stay together, stay connected, continue to educate ourselves and grow, continue to invest in ourselves and give back, and just stay engaged and motivated.
That's good. That's good. Now, when I first introduced you, I mentioned that you own your own company. It's a property management company called Shedlock Properties. And actually, I forgot to mention that you do have your license hung with Berkshire Hathaway, but you do have a separate property management company. And with all the things and the changes when it comes to the rental market and landlord tenant issues, and I know we're not going to go really deep into that, but I did want to ask you this question because we have a lot of people that are on, and I'm sure if they're not already, they'll be working with people that want to buy a home, or that they're working with sellers that own several properties, and they're just like, what am I going to be able to do? Can I sell it? So my question to you is, what's your outlook for 2021? And just, we want to kind of get your take on the rental market as it pertains to property management.
Okay, good question. We've already experienced in this last year, we've already experienced a lot of owners that have had to give up their rental properties. A lot of the owners that I manage properties for are very normal, independent people. They're not investors. They've purchased a property. They were fortunate to be able to grow into a new property. So they kept their first property and they kept it as a rental. But a lot of them can't necessarily carry two mortgages if there's a tenant that's not paying rents. In some cases, I've had owners that have had to sell their primary residence due to job loss or what have you due to COVID, and move back into their rental properties. So having already experienced that in the last 6 to 9 months, I anticipate we're going to see a lot more of that in the next coming year. I think statistically we're at approximately 15% of mortgages that are in forbearance due to lack of rent payments and owners that have taken advantage of that. The problem is that if tenants don't continue to pay their rents and owners can't maintain those properties, I foresee that we're going to see some short sales down the road. I foresee more owners are going to have to sell those properties. And since they have been rental properties, I anticipate they're going to be deferred maintenance properties. So I think that's going to give us more inventory in the real estate market. I think it's going to give us more opportunity for those who want to buy properties, because I think these properties are going to need some work. So that means their pricing is going to be a little bit, it's not going to be quite market. They're going to be able to get some deals. I think there will definitely be some deals out there.
Wow. Okay, listen, guys. Janine just gave you a huge nugget. She said something without actually saying something. And if you were listening close, and if you're like myself, I probably would want to start talking to some of your sellers or people that you've worked with in the past that own properties like this, maybe a private owner, maybe a one property investment property owner, and just talk to them about what they want to do with their property. That's all I'm going to say, because this is not lead generation 101. So but I want to transition over to, we want to know a little bit more about you. So if there's one thing that you could change about yourself, tell us what it would be.
If there was one thing I could change, I would want to be a novelist.
Wow. Oh my goodness. That's awesome. So now we know who to send all of our stuff to spell check, right?
Yeah, sure.
Wow, that is so awesome. And is that something you've just dreamed of your whole life, or?
Always wanted to write books. Always wanted to write books. And I'm not saying I'll never write a book, because there's still plenty of time in my life and that's still on the bucket list. So you never know, someday it might happen.
Oh my gosh, that's exciting. Well, if you need any subjects, I can give you a ton of subjects that you can start writing about. Who's your hero?
Hero. I don't know that I really have a hero. I always aspire to be like smart, independent, successful women. I think that anybody that can, just go out there and do what you want to do. I believe that the world is your oyster at any age, at any point in time. And I just believe that everybody should give everything a shot. So, I mean, as far as having one hero, I don't, but there are a lot of very successful people that I really, aspire to be more and more like.
Awesome. That's awesome. I want to do what we call surefire. And I love this because this is kind of like that 1, 2 words. And we get a chance to kind of even know you a little bit more, what Janine is thinking inside. So I'm going to say a word and you just let me know what your thoughts are on that. So, and I'm going to start with, do you prefer to color outside of the lines or inside the lines?
Well, obviously, if you color inside the lines, things are nice and neat, but sometimes you have to get out of the box. So
All right.
sometimes you got to get outside the lines.
Okay. All right. Okay. Now, do you prefer reality TV or soap operas?
I'm definitely a soap opera gal.
Oh, wow. I'm so surprised because I thought you would say reality TV. So what's your favorite soap opera?
I grew up watching General Hospital.
Oh my gosh. Luke and Laura, are they still on there?
They're still on the air.
No. Oh my goodness. For those of you who are, well, getting younger, let me put it that way. You'll remember Luke and Laura, right?
Uh-huh.
Oh my gosh.
Back in the day.
60 Minutes or Dateline?
Oh, Dateline.
I like Dateline too. It's just super cool. But I do like 60 Minutes, that clock. I mean, it's okay. Carpet or tile or wooden floor?
Definitely wood floor. Hardwood, good, real hardwood flooring.
Real, right?
Yeah, real hardwood.
Cash or credit?
I've come a long way in my life, so I prefer to use cash these days. Cash is king.
It is, isn't it? Cash is king. We need more cash, right?
More cash.
And what about this? This is the last one. I just kind of want to get your take on this. American Idol or America's Got Talent?
I would have to say American Idol because I always wanted to be a singer when I was a little girl. So I don't mind watching American Idol, and I've watched both, but yeah, I'd have to go with American Idol.
Wow. So you want to be a novelist, a singer, boy. You know what? We're going to do another show and we're just going to give you a mic.
Yeah, no.
And we're going to give you a table and then you're just going to go at it. Okay. Well, Janine, I want to say thank you so much for just accepting this to come and share some things about yourself. And I'm sure those that are watching, we're just so honored that you are our 2021 president for this year. And me personally, it's an honor to serve with you this year. I can't wait to see what we'll be able to do together. But I want to thank you again for being our guest today.
Thank you, Stephanie. And I am so proud that you are going to be on the board this year and part of the team. So we'll do great things. Thank you.
Awesome. Thank you. Well, listen, everyone, we are not finished. And if you just joined us, you probably were like, what in the world is going on? This is called Real People, Real Talk. And we just had a powerful interview with our 2021 President, Janine Shedlock, and just asked her questions. And we're really just trying to make our education, the things that that CVAR has to offer, a little bit more interesting so that you'll stick around for our next guest. And our next guest is Jordan Levine. He is the Vice President and Chief Economist at CVAR. And we're so glad and honored that he's here, and he's gonna talk to us about what are some things that are coming up and how does the economy look when it comes to real estate for our businesses in 2021.
Stephanie, thank you so much. And thank you for having me back at CVAR. It's good to be back. I was going to share my screen and show a few slides, but just to kind of hit the major themes, I think the idea is that we're off to a really strong start. When you look at our press release that CVAR put out a few weeks ago, we saw that we had more than made up for that lost ground during the second half of 2020. And I'm pleased to report that when you look at our weekly data, and that's kind of one of the positive side effects, maybe, or silver linings of the crisis, is that we stood up basically daily reporting, where we're going out and grabbing this stuff every single day so that we don't have to wait until mid next month to be able to tell you what's happening. And those numbers through the first couple of weeks of January are continuing to show double-digit growth, both of prices and in terms of sales. So things are moving in the right direction, and I think housing is going to be a bright spot for us this year. There is a bit of a tale of two markets happening out there, and so you want to pay attention to your different price segments. We're seeing strong demand across the board, but one of the things that we're seeing is that the pricing at the top end of the market isn't as competitive as what you see in the kind of entry level segments, or even up to $1 million, really. Still lots and lots of buyers for those types of products, just not necessarily paying top dollar. So we want to kind of zoom in and understand that nuance in these different types of market segments that we work in. Of course, I have to come today as a kind of two-handed economist, which President Truman always said he wanted a one-handed economist, because we were always talking about how on the one hand things were this way, but on the other hand, and I think that is an important distinction, because while I think that we came into this crisis with much better fundamentals, and you still hear sentiments that perhaps we're on the cusp of a lot of foreclosures or a major 2008-esque downturn. And I just don't think that we have the kind of fundamentals, the fundamental imbalances under the surface of our economy that we had then, that would really lead to these kind of snowball effects. And I think that those kind of those conversations about the fundamentals and how we were, as my 10-year-old daughter would probably say, the bones were good coming into this crisis, that's going to be important for those folks who are really skeptical or not wanting to put their home on the market, or buyers who think they're going to wait until prices really come down in a major way, and they could potentially be missing the boat. So I think we want to make sure that we understand and can communicate those fundamentals to our buyer and seller clients out there. But I also think that we need to make sure to be realistic, that we've still got a lot of healing left to do. And even as we remain optimistic, in fact, we're probably a little bit more optimistic than we were even a few months ago, we can't be overconfident. And I want to warn you against kind of throwing your business in cruise control and kicking your feet up on the desk and throwing it in autopilot for 2021 on the basis of the strong numbers that I'm about to show you for 2020. When you look at our forecast, we remain optimistic, but again, not overconfident. And one of the big reasons why we can't continue to forecast this 20 and 30% growth that we've enjoyed up to this point to be sustained through the end of the year is because we simply just don't have enough inventory out there. And so I think it's really important to get serious about supply, both in terms of taking a data-driven approach with your clients and really putting the data under their nose, combating a lot of that conventional wisdom that maybe says it isn't a good time to sell your home during a downturn and things like that. And also trying to advocate for new construction, because the economy is poised to get better. The housing market remains a bright spot. We've got rates that are at or near all-time low levels. And we've got a public health crisis that should be fading as we enter the second half of this year. And yet we can't put buyers into homes that aren't for sale. And so, that's why, again, optimism, not overconfidence, right? But let's go through some of the numbers, which are fairly positive after a pretty steep ramp up during the holiday season and following the holidays. Primarily, we have seen the numbers on the public health side start to move back in the right direction, both in terms of the raw daily numbers, and these are through yesterday. These are new cases here on the left, and I don't know why my labels got messed up. I apologize for that. But more importantly, the 7-day average, right, which is what the state pays attention to when they clamp down. And of course, we're now lifting some restrictions in many parts of the state so we can go out and eat outside again and many other positive things. So these numbers have finally started to move back in the right direction. And of course, we've got the light at the end of the tunnel in terms of the vaccines coming down the pike as well. So good news on that front. We see that the macro economy, right, which I'm showing you one of the major pieces here, U.S. retail sales, and you can see consumers are still basically 2/3 of the economy, give or take, that after suffering the biggest hit in recorded history, actually consumers had bounced back to pre-crisis levels by mid-summer of last year, and that has really fueled a lot of the growth that we've seen in the jobs market, right? And one of the questions I get asked all the time is, how can we have such a strong housing market right now in the midst of a really deep recession? And I think one of the reasons for that is in this chart that shows you where those job losses were concentrated, and they were largely in those kind of lower wage earning industries. And in fact, folks who are working in finance and insurance, professional, scientific, technical jobs, some of those very high wage sectors either were more moderately impacted or not impacted at all, or were impacted but have since had a much stronger rebound. And in fact, if you look at all of the jobs that we lost, of the 2.6 million roughly jobs that we shed here in California, the vast majority of those, almost 90%, were in industries that pay on average less than $100,000 a year. And so even as folks at the bottom end of the income spectrum have been disproportionately impacted by the crisis, folks at the upper end of the income spectrum have been relatively unaffected, while at the same time have now enjoyed all-time low interest rates, and our homes are more important to us than ever before. And we have a little bit more flexibility because we don't have to go to the office every day in terms of where we actually buy that home. And so when you put that together with rates that are, again, near all-time low levels, I think we're at 2.77 last week, and that's just a little bit higher than the true all-time low of 2.65. That is all leading to this very robust environment for buyer demand. And you can pretty much pick your favorite indicator. This is new purchase applications for mortgages, which were up 15% last week, but which have been up by double digits for I think like 35 or 40 of the last 41 or 42 consecutive weeks after hitting bottom back in May. You look at scheduled showings through showingtime.com. They're not exactly on top of mortgage applications, but 12% is pretty close to 15%. When you look at new PED forms, and this is just for LA County as an example, but you don't see the kind of tapering off in December that you would have normally expected to see in a kind of typical holiday slowdown, right? And you can also see here that we don't see full abandonment of the cities, in contrast to what you read in the newspapers. We do see more folks leave California in 2020, and we actually had slower population growth than in quite some time. And yet, even as that goes on, we still have double-digit growth with folks really putting down roots in our urban cores as well. And so I haven't given up on our cities yet. If you look at the trajectory of the housing market graphically, right, you can see that huge chasm in the middle of last year when we basically pressed pause on home sales in March, April, May, even into June a little bit. But you can see how robust the second half of the year was, that we didn't just bounce back to pre-crisis levels. We actually hit the highest level of home sales in over 15 years. So in December, we were up by 28% on a year-to-year basis at an annualized pace of almost 510,000 homes. And so when you kind of put that all together on a cumulative basis for the year as a whole, in fact, you can see that we ended 2020 not just up 28% from the previous December, but for all 12 months of the year, up 3.5% from 2019 levels. And so that is, again, just a testament to how strong the second half of the year was, that we were able to claw back all of that lost ground from the spring home buying season and then some. You know, I mentioned taking a data-driven approach with your buyers, and in particular your sellers. In a lot of cases, sellers are relying on conventional wisdom. They're not in the weeds studying all this data the way that we are every day and totally nerding out on the minutia. And they're missing the fact that, you know, median time on market is 11 days, that there's just 1.3 months of inventory out there statewide, and that the median home is closing at or above list price, right? And so therefore we see prices rising by double digits. But if you're, again, relying on the conventional wisdom that says recessions aren't good times to sell your home, or that recessions mean home prices are about to fall precipitously, then you could be missing the boat either on a good opportunity to sell your home if you're thinking about moving, taking advantage of Prop 19, which you're now able to take your property taxes with you and all of that good stuff, or as a buyer missing out on potentially all-time low interest rates, waiting for, you know, triple digit price declines that might not actually be coming down the pike. When you look at how that's broken up, I mentioned how the top end of the market has been doing disproportionately well, and you can see that here, right? While the market overall in December was up 28%, 2 million and above was up by even more than that, right? 85%. 1 to 2 million was up by 71%, and so forth. Really only the non-existent 0 to 300,000 range was the only segment of the market that wasn't growing at the end of last year. And you can see that the top end of the market wasn't just hot at the end of the year, it's really what's been carrying us out of the downturn in general. And that kind of makes sense when you think about it from the perspective of that economic data that I shared earlier, right? Where folks in those higher income categories, folks who rely on stock portfolios, as an example, tend to be doing much better than folks at the bottom end of the income spectrum, or who really are relying primarily on wage income in their housing decisions. And so that's one of the reasons why we see really robust prices, right? We set a new all-time high price in December of 2020 at $700 and almost $18,000. That's abnormal in and of itself, right? Usually we see prices peak seasonally in the middle of summer, and that's also a 16.8% increase on a year-to-year basis. Part of that is because of all this excess demand and such a limited amount of supply, making the market very competitive. But another part of it is also that's just that we're selling more high-end homes, which tends to impact that mix of sales and kind of pumps up the overall price numbers. That being said, even when you kind of look at it on an apples to apples basis and kind of strip away some of those high-end sales, what you can see is that we're still looking at real honest to goodness appreciation in the kind of 7, 8, 9, 10% range. So still very, very robust growth. So that's the good news, right? Is that we've seen a lot of progress economically. We've started to add back jobs. A lot of our high wage jobs that are our primary demographic from a home ownership standpoint have continued to bounce back, and that has showed up in terms of the overall housing market. But again, I want to just take a quick opportunity to warn you against the temptation of looking at these 20 and 30% growth rates from late last year and deciding that we can throw our business in cruise control or pop the champagne corks and pour ourselves a mimosa and ride the rest of this year out in Hawaii and let our business take care of itself. First and foremost is, and I mentioned how important consumers are to the overall economy. About 7 out of every $10 that gets spent GDP wise comes from consumers. Really volatile still and bouncing around in terms of their consumer confidence. And B, we've actually seen those retail numbers retrench a little bit over the course of the last couple of months. And of course, as go consumers, so goes the rest of the economy. We don't expect a big consumer retrenchment coming down the pike, but more just to manage expectations about the pace of the recovery, because we still have a lot of a long road to hoe, shall we say, or a lot of healing left to do, particularly on Main Street, right? So I'm showing you here that same retail spending number that's our kind of proxy for overall economic health, but now I'm breaking it down between online versus brick and mortar sales. And what you can see is that, yes, those of us who, can do our jobs remotely, right, like the spreadsheet nerds like me, people who work in the technology sector, video games, media, all of that stuff is doing even better than ever. In fact, online retail is up about 30% from where they were even before the crisis, right, versus those kind of Main Street, our bars, our restaurants, our hotels, our boutique retailers, our hairdressers, our nail salons, all of that stuff is still very much grappling with just getting back to square one. And so again, a lot of the improvement that we'll experience economically is going to go towards kind of clawing back some of what was lost. And that's not to say that we're going to start going back in the wrong direction, but it's just going to limit how fast the pace of that growth is moving forward. And you see that as well as consumers started to pull back recently. Here in California, we actually saw the unemployment rate go up a little bit, not a lot. And I don't think we should be too alarmed as we are able to start opening the economy back up. These numbers should start to follow suit with the rest of the United States. And you can see that we've already made tremendous progress in terms of the labor market. But you can also see that we're still very elevated relative to historic norms. And so there's still, again, a lot of financial distress out there that we're going to have to continue to work through, right? We burn through savings. We built up debt. And so even as these jobs start to come back, we're not just going to be able to take all this new income and pump it right back into the economy. A lot of it's going to go towards this kind of catch-up effect for money that we had to use to kind of bridge ourselves through to the end of the public health crisis. And you can see that job growth in California did downshift nationwide. We're still 10 million jobs short of where we were back in February of 2020 before the pandemic. And in fact, you can see California, after a couple of good months in May and June, have really seen the pace of that recovery peter out in the face of ongoing restrictions. In fact, we actually lost 52,000 jobs last month. And so again, we think this is totally correlated with the public health numbers. And as those start to go down, we'll be able to open up. As folks get the vaccine, we'll be able to resume more normal economic activity. And these numbers should continue to improve. But it's also the case that we have a long way to go. The biggest reason why we can't forecast ongoing 30% growth to persist all through 2021 comes down to inventory, right? And we cannot put buyers into homes that aren't for sale. And if you look at our press release, you can see that active listings were, we had basically half as many in December as we had last December, in December of 2019. And guess what? Inventory wasn't any picnic in 2019 already. We were already pretty tight on inventory. In fact, if you look at the kind of seasonal pattern of inventory, this year was tremendously abnormal. We peaked in listings in April. And so all of this growth in transactions that we've experienced over the course of the last 7-8 months has really come at the cost of what we have left on the shelves. In fact, if you just go back a couple of years, we ended 2018 with almost 50,000 homes available for sale on the market. And last year, we ended 2020 with less than 20,000 homes on the MLS. And so again, the economy should improve. The public health crisis should come to an end this year by the end of the second quarter, hopefully. And we've got low rates and jobs that are coming back. And yet, we have a more modest outlook for the forecast because, again, we need that inventory to start to come around. And so for me, the kind of arching conclusion is that we can be optimistic, but we don't want to be overconfident. When you look at the numbers, the final numbers for 2020, we call this a projection still, but essentially it's our estimate. It might change a little bit in the next week or two, but we're looking at almost 412,000 home sales. That's our best year in almost 3 years, a little over 3 years, right? It's a 3.5% increase from where we were. The first time we've seen the market grow in 2 years or 3 years, essentially. And prices set a new all-time high of 559,000 on an annualized basis, up 11% from the year before. Going forward, we expect that the market will continue to grow, but it will be held back some by this lack of available inventory. So we're projecting in our baseline scenario 425,000 units, about 3.3% above 2020, with ongoing price growth in the single digits. We do have a best case scenario where this lack of inventory shows up not as missed sales, but instead as higher prices, in which case we'll be looking at something more like 435, 440,000 sales, with prices going up by about 7.5%. We do have a worst case scenario, which I'm not going to beat you to death with because it's becoming less and less likely by the day, but I will send these slides to CVAR so that they have them. And so I would just conclude by saying that, the housing market is still doing unseasonably well. So we haven't seen much of a slowdown up to this point, and we still see robust demand through these first 3 weeks, whether it be in terms of mortgage applications, buyers wanting to go check out properties, or those PED form filings that we're keeping track of. And in fact, we for all the kind of trouble that we had during the spring and the beginning of summer last year, we actually ended 2020 up in terms of both prices and sales from where we were in 2019, which is pretty remarkable. That being said, we do have those kind of broader macroeconomic headwinds out there, which doesn't mean that we should panic, right? We don't see things moving back in the wrong direction, but we still have a lot of folks on unemployment. In fact, in California, those numbers are still in excess roughly of 2 million. And we still got this kind of last little bit of the public health crisis to hunker down for. It's unfortunate. I just had a family member pass away yesterday, and it's just such a shame being this close. And so, we still got a little bit to go to get fully out of the woods and put that firmly in the rear view mirror. And we do have more pressure pulling folks out into to other states that it really is incumbent on us to get serious about supply. But, that being said, the market is poised to do well. I just don't want you to throw your business in cruise control. I want you to put that data under your client's nose, convince them it is a good time to sell a home, and most importantly, to get out there and advocate for supply. If you want to help me stay up to date so that I can tell you where things are going, please take our survey. And more than anything else, I would just say thanks to Mark and to CVAR for having me here. And I'm happy to entertain questions if there's still time left for that.
Jordan, we just want to say, first of all, we're very sorry that you lost someone in your family due to this terrible, terrible disease. And so our prayers are with you in that as you continue to heal with that. But we also want to say thank you so much for taking your time out today, for being with us. Such rich information that we received, and we're very grateful for you. And thank you for being with us.
Thank you so much.
All right, guys. Well, listen, that's all that we have for today. Don't forget, you can put your comments on Facebook if you want to. You can go to CVAR's Facebook page, which is Citrus Valley Realtors, or at Citrus Valley Realtors. And you can find us. Make sure you so that you'll be notified every time there's a class or there's something that's going on in our at our board. And with that, we want to say thank you so much for taking the time out of your day today to hang out with us. And so we'll see you next month. We have an amazing guest who is a young professional that's going to be with us. I don't want to say her name because I want it to be a surprise, but tune in then. We're going to have some great information for you as well that's going to help you grow your business this year in 2021. All right, guys, you have a wonderful, wonderful week.